Great afternoon, everyone. I wanted to just do a really quick update before the market opens, just to kind of give an idea as to some setups and what some pairs are looking like. And what you can do is jot down the ones that you believe you want to trade based on that analysis. Also, this video is going to serve to show you how I go about um, determining my setups before the market actually opens. And so you can follow along with that, incorporate that into your routine. I typically do this before the market open. Sometimes, to be real honest, I just do it at even after the market open on Sunday because I don't typically trade on Sunday. Um, I I can't tell you not to trade on Sunday because if there's a great setup and you know what you're looking for and price is where you want it to be, um, hey, take the trade. That's what I do. But I make it a practice that I don't go, with the mindset of that I'm trading today, right? I don't go with that mindset. My mindset is that I'm not going to trade today. So if I don't see anything, it's no big thing. And the reason being, honestly, is because on Sunday, the market is just opening up. It's a lot of and fluctuations going on. It's just trying to get it together. Just think about you. When you're sleeping, you're in a sound sleep. You had a great night's sleep, and you're getting up to get prepared for the next day. Most people don't just jump out of the bed and do a happy dance and they get ready to go. Most people have to wind themselves up, right? You kind of get out of the bed and you make your way to the bathroom and you get yourself together, and after a shower and all the hygiene stuff, you tend to have a little more pep in your step, right? It's the same thing with the market. So it has to get time to kind of wake up. The systems are waking up and activity is starting to re-engage in the market, and there's just a lot of fluctuations and different things like that. So I just kind of stay out of it. Like I said, there are some times here and there where the market, a pair gives me a really good setup, and if that's the case, I'll take it. So what I'm gonna do is go through some of the pairs, and typically what I do is I use my symbol changer right here, right? You all have that, and I start with the first one, right? Now what I am looking for is the big arrow. I'm looking for the big arrow, okay? Because I'm looking to see if we still have a move that has not been made yet. And typically when you have the big arrow, your MACD has not crossed over or above your center line. And also, just so that you all will know, I'm going to start referring to the 00 line as the center line because that's really what it is. Okay. Um, so we're looking for the big arrow. Now there will be times, and I'm sure that as I go through this, we'll see an example of it. There are going to be times where you'll have the triple arrow, but the MACD has not crossed over or above the center line. And if that's the case, that is a good setup. Actually, it's even better because you're closer to the crossover on the MACD. So keep that in mind as well. So what we're looking for, and then I just jot them down, right? I jot them down, and I am doing this real time with you all, and I recommend that you all just grab a pencil and paper so that you can write it down as well, and you'll be in a better position when things start moving. Okay. Now, one of the questions that Jackie had over the weekend about getting in. Oh my gosh, Jackie, hold on. It was a great question. I did respond to it in the group, but I want to kind of reiterate what she asked, which was a great question. Okay, and which time frame should I be looking for the big arrow and the confirmation? Okay, the big arrow is based on the time frame that you're trading. When I trade on the hour chart, meaning I analyze the market on the hour chart. Sure, I go to the higher time frame to look for directional support, but I analyze what price is doing on the hour chart is what I use to base my selling or buying decision. And then I drop down, and you can drop down to the lower time frame for a entry. Until you get really good at doing that, I just recommend that you enter on the chart you're analyzing. So that could be any time frame that you choose. I prefer and I recommend at a minimum the hour chart. A lot of people trade on the 15-minute chart, and you can do that as well. The only reason I don't analyze on the 15-minute chart or trade on a 15-minute chart is because the lower the time frame, the more fake outs you would have in price. In other words, price is not as stable on the lower time frames. There's a lot of back and forth, a lot of, oh, it looks like this, but then it actually isn't. So the higher the time frame, the more stable the price action is. So that's the reason why I like the hour chart. Okay. And okay, so here we go. This is the one that I wanted to refer back to. Okay, the pairs. This was the one. This was a really great question there, Jackie. Thanks. To give you a shout out there, Jackie. And that's what it is. We all learn together, guys. We all learn together. So somebody's question can be a learning experience for someone else. You may not even thought about that, but you didn't know it. So this is great. And I encourage you all to ask questions and things like that. So Jackie was basically asking that basically if it's okay to track multiple pairs, right? To track multiple pairs. And you can. See, here's the thing. With the triple arrow system, we have access. We're only looking for certain things. So we don't have to really analyze it, like, because the triple arrow system does it for you. It'll be different if you would track and say 4 or 5 pairs, and you have to go through each one of those pairs and analyze, break those pairs down, and do all of the things and identify patterns on those pairs. What is that price action doing on those pairs, on that pair? And it more than likely is different on another pair. It's a lot of work for a beginner. That's the key. For a beginner. As you develop your skill set, you'll be more apt to do that because you can handle, you know what you're looking for. You're able to organize what you're doing per pair and different things like that. So for the beginner, I do not recommend that you track multiple pairs. However, with the triple arrow system, it does make it easier for you to just identify the pairs that are close to your price criteria. And when I say price criteria, I basically mean the big arrow. Did the MACD cross above or below the center section? If it did not, boom, write that down. That's the extent of your tracking, if you will. That's the extent. You didn't have to go through all the other manual processes when you're breaking down a pair and determining what direction the pair's going in and where you're going to go. You don't have to do that because the triple arrow system does it for you. It's a great system, guys. It's a great system. Use it at its fullest capacity because it's going to benefit you. It certainly will. So let's get to it. All right. So USHEF. USHEF definitely is a pair that I would write down. Why? Because it has not reached the center section yet of the MACD. Okay, so this is going to be going in a downtrend. It's still in an uptrend because we don't have the triple arrow, so it's still in a strong uptrend. And another reason we know that is because price, right? These candles, price is above your moving average, your 50 moving average, right? Also in the MACD area right here, the moving average is above the center line, which is buyer's territory. So this is still in a dominant buy. And so what that means is it can shoot straight back up and do whatever it's going to do. But the big arrow, the bearish big arrow here tells us that it wants to turn around relatively soon. When will it happen? It will basically happen when you get the 2 small arrows going in the same direction and the MACD crosses over your center line. That's when price has kind of made its descent in the other direction. Remember this, it doesn't mean that price is not going to go back up. It doesn't mean that. It just means that the momentum in a downtrend, it has occurred. The momentum in a downtrend has occurred when those two criteria were met. However, price still will fluctuate. It's going to pull back and it's going to continue. It's going to pull back and it's going to continue. But the overall direction of the market is a downtrend. That's what that means. Okay. So now let's move on to our GBP pairs. Okay. Let's move on to our GBP pairs. What is that looking like? Okay, great. So this has not met our criteria yet either, right? So write that down. Now keep in mind, just because you're writing them down doesn't mean that you're going to trade all of them. But I'm going to show you the sweet thing about how we trade utilizing the trading plan and the triple arrows. Okay, so here we go. Euro USD. Euro USD wants to make a turn as well. So we're gonna write that down. We got the big arrow here. It has not crossed above our center line. So let's see what's going on. Right, the USD JPY is in a uptrend. Now this is a great one. This is a great one. Oh, you know what I wasn't doing though? Let me put the, and what I do is for Euro USD, for any of the pairs, put the direction that you're going to be positioning yourself forth. So you're looking for a buy on Euro USD, and you're looking for a buy. I believe that was a buy on USHEF. Nope, it was a sell. So you're looking for a sell on USHEF. And for GBP USD, what was that? That was a buy, I believe. Okay, yep. So that was a buy. Alrighty. So let's go ahead to USD JPY. So USD JPY, obviously the move has been made back in this area here, right? So this is what you do. So the move has been made back in this area. We got our triples right here. We wouldn't have gotten in if we're following the trading plan, right? Because we would have been waiting for our MACD to cross over the center line. And it happened in and around this area, right? And so it did. So the move has already been made in essence. And it is for a buy. It's for a buy. Remember, we only trade in the direction of the big arrow. Even if there's a sell opportunity, which there will be, but we only trade with the trend for that time frame, because that always keeps you on the right side of price, and your winning probability is much higher when you're on the right side of price. So in this case here, what we're looking at is price going down. We're looking at a slight pullback because the impulse is bullish, so it's going up. And so you know, price goes up, then it pulls back. Then price goes up, then it pulls back. Price goes up, then it pulls back. Price goes up, now it's pulling back, right? That's all price does. It impulses, it corrects, and it continues. Okay, so right now we're in a correction from this bullish impulse. Which is why you see it's still an overall bias territory, because why? We're above the 50, right? We're above the 50, price is above the 50, and the moving average is above the center line. These are all bullish territory. So we're still in an overall bullish move. And what that means is that price can still pull back, right? Like it did here, but it's still, it didn't break the 50. It didn't break the 50. So we're still in a bullish territory, right? What is price doing here? on the moving average of the MACD is crossing over, going in a downtrend, right? Going in a downward motion. I don't want to say trend, but a downward motion. It's a pullback. So you don't want to, and it's going in the opposite direction of where you're trying to trade, because you're trading with the trend. So we're only looking for a bullish move here. Okay, we're only looking for a bullish move. There's an opportunity for a buy, of course, but that's when we get into trading pullbacks and different things like that. And likely we're right here. I do expect price to kind of go back down to this area, right in this area, and then pull back. But nevertheless, let's move on, because we're not going to write that one down. It doesn't meet our criteria. So let's move to USD CAD. What is USD CAD doing? USD CAD, the move has already been made. And typically you're going to find that the the pairs, the primary pairs, the same primary pairs are moving in the same direction, right? So your USD pairs, for the most part, not all the time, they typically move in the same direction. Okay, so this missed the move. We're not doing nothing with that. And odd USD. What is odd USD doing? Odd USD is and it's trying to go up. So we're going to write that one down. It has not made our move yet. We didn't miss it, so we can put odd USD down for a buy, right? Because that's what we're going to be looking for, because that's the direction of the big arrow. And then we're going to have Euro GBP. Euro GBP. What is Euro GBP doing? Okay, Euro GBP. The move was made on Euro GBP, right? It was for a buy, of course, and then we would have waited for our, we would have put, once we would have gotten this, the moving average would have been down in this area. We would have put our alert in, and it would have alerted us at this point here. We look left, right? We get the alert. We come back to the charts. We look left. We verify that we got our triple arrow. Absolutely, we do, right? And then where's price closing at? Where's it closing at? Because we're looking for buys. So we're looking for price to close above the moving average. And it did. Slightly above on this candle. And then it closed on this candle as well. And then it went up. Now it's in a pullback. So we have a continued impulse, which means for this is bullish. So it's a bullish impulse, go up. And what happens after it goes up a certain point is going to pull back. And that's what it did here. It's pulling back, and then it's going to go back up, right? So this is still in the move has already been made, but because the move is already made, I would not suggest trading that one, though you can once it impulses back up. But let's stick to the basics for now, okay? So let's not put that one on. Euro odd, Euro odd. Let's see what Euro odd is doing. The move has already been made on Euro odd as well. So let's keep it moving. Euro chef, Euro chef. We have our bullish on Euro chef. The move has not been made. It hasn't crossed over. We don't have our triples. So let's go ahead on and put Euro chef for a buy. See how simple this is, guys? For a buy. We don't have to trade all of them, but we're identifying setups. Euro JPY. Let's see what Euro JPY is doing. Okay, Euro JPY, this is a great one. This is what I was waiting for, this example. All right, so it was for a bullish run, right? And we did get our triples. We did get our triples. But did the moving average cross over our center line? No, it did not. So we still can trade that. And it's close to crossing over. That's what I love. It's close to crossing over. And so if price doesn't do something real funky and out of the way, and the market makers don't spike it, and news don't make it wacky, I have to preface that because those are real scenarios, then this will probably hit you alert before the other ones. Because why? It's close to the center line. So you can actually get set up for JPY, Euro JPY, for a buy. Right? And when the alert happens, what we're going to do is come back to the chart. We're going to look left. We've already verified our triple arrows right here and right here. Even though you got two yellows going up, but no, we need a yellow and, in my case, a green. Whatever your color is, long as it represents the buy. We need those two, right? And remember, it doesn't have to be near each other. And this is a great example of that as well. So we do have the triples. We got the big arrow. We got the two small arrows going in the same direction. So that's already confirmed. All we're waiting for is now for the MACD to cross our center line. Then when we come back, we're going to wait for that active candle to close so that we can confirm that it closed above our 50 moving average. And when it closes above the 50 moving average, then we can take the trade. Okay. One of the things that I'm going to tweak with that as well, just because I'm always looking to tighten the entry and to reduce drawdown. One of the things that I'm going to tweak is that the next candle, so we wait for the active candle to close, the next candle needs to be going in a green candle, right? It needs to be a bullish candle. And then you can go ahead and get in. Alrighty. So let's move on. That's a good one, guys. EJ, Good one. Alrighty, GBP Chef, GBP Chef. What is that doing? Okay. Here is another. We missed the move. That was sweet right there. Look at that. That was sweet right there. Triples came in. Big arrow going down. We would have put our alert right in this area, right? Yep. And then it would have been this candle right here, maybe this one, but nevertheless, we would have came back to the chart, saw our triples were there, closed below the 50, and we would have taken that down to, well, for 20 pips, you would have definitely got to 20 pips, but it went down to like 39 pips. That was a good one. And as you can see, again, the way price moves, we got to understand price moves in three directions. That's it. Impulse, whether it's going to be a downtrend or uptrend, is an impulse. Then it corrects, meaning it pulls back. Then it continues in the direction of the impulse. That's all price does. So this is bearish, so it's going down. So this is a bearish impulse, so it's going down. And then what does it do? Like even right here, it went down, then it pulled back up right there. So that is your correction or your pullback. After a pullback, it always continues in the direction of the trend or the impulse. So what direction is that? Down. Bam. It took it down. Then it went down to this point and then it pulled back up again. Look, it pulled back up again. Then after it pulled up, what did it do? It continued in the impulse direction. It went back down. Now look at it. It went back down, and then after the impulse, what comes after an impulse? A correction, which means it pulled back up. You see that right here. You see that right here. And now what is preparing to continue back down. Why do I know that? Because after a pullback, you have a continuation. Why else do I know that? Well, candlesticks are important. Identifying candles, different candles, is very helpful. This is a doji. A doji is basically an indication of a reversal, right? A reversal from the previous move. The previous move was a pullback. So if I'm going to reverse from the pullback, that means I'm going to continue back down. We can do another training on that, and I can break that down for you, but it's important to understand where you are in the market at all times. What is price doing? What is price doing, right? That way you're not always relying on just one way of trading, the triple arrows, just waiting for the big arrow and then, for the move not to be made. Even if the move is made, you can still position yourself for a trade. And this really is a good one for a downtrend. It really is. Okay, but I just want to keep you in this zone first so that you can get that down first, or what you're looking for, and then we'll start building upon that. Okay, so we're not gonna put that one down. CAD JPY. CAD JPY, we got a big arrow, we got one small arrow. It's in a bearish move. Okay, it did not pass below, so this is a good one, right? CAD JPY for a sale. And then we have odd NZD. Odd NZD. I don't typically like NZDs, and if I trade an odd pair, it's usually odd USD. But I don't like the NZDs because it's very expensive to trade them, and they're very volatile. So I like more steady movement. Okay, so this won't work anyway because we missed the move. Odd CAD. Odd CAD. What is odd CAD saying? Odd CAD is preparing for a bullish move. Okay, so this is a good one because it hasn't met our criteria yet. So odd CAD for a buy. Okay, so I think that you all get the message, right? You get the message because you don't have to trade all of these. Okay, more than likely you're not anyway. More than likely you're not anyway. So what I do want to do at this point is we have 1, 2, 3, 4, 5, 6, 7. We have 8 pairs. 8 pairs that we're going to put alerts in on. Alerts in on, right? So what we're going to do is we're going to go to our trading view, because you're going to put your alert in on trading view. I do recommend trading view. Keep everything in the house, so to speak, and it's user friendly. However, you can download an app called Easy Indicators Dashboard that would allow you to put a indicator your um, on your um, phone. Put an alert on the indicator is what I meant. Okay. All right. So now what you're going to do is you're going to go to the indicators and I'm sorry, not the indicator. You're going to go to the pairs that you have identified, and we've identified UJ, right, which is one that's real close. So let's go ahead and put that alert in. Okay. So we go to UJ, and I'm sorry, I always do this, but actually I found out over the weekend that yeah. So, because at first I was going down in the MACD and I was right clicking on the MACD line to pull up alert on MACD. You can do it that way, but you can also just go to alert. I just found this out. It's little things, guys. We're always learning. And you can just drop down to MACD. Bam. And you're right where you need to be, right? Okay, so then what we're going to do is we're going to change histogram to MACD because we want to be alerted when the MACD line, which is the blue line, crosses. So we're looking for a buy on EJ. So we want it to be crossing up, right? Very important. We want it to cross up. And then for the price, right? The price on the MACD, as a matter of fact, I already have this in. And this is how I know because it is, you get your little dashes on the MACD. So I already have this in. Okay. All right, cool beans. Alrighty, so what I like to do is, let's see what price I have on here. Okay, so I have 0. Remember this, with the price, is the center price on the MACD is zeros. That's it, because it's in the center. It is, that's it, it's zeros. Whether it's 0.00000 or whatever. So we know that if we want the price to cross, to not only just touch it, but kind of start penetrating it, then we don't want to put it right on 0. We want to put it slightly above because we're buying. We want it, it's crossing up. So we want to put it slightly above the 0. So it would be 0.0003, right? 0.0003. And each price, now this is a JPY pair, so it's not too many zeros. It's always three digits after the decimal. So I'm going to take off one of those zeros, right? So each pair, the number of zeros will vary. And basically what you do is just back out the last 0 and put 3 or put 2. I typically do between 1 and 3 so that the MACD line would have gone beyond just touching it. It would have actually started to penetrate. And that's what I want, right? So you put that there. Now, another thing to be very mindful of, when you are buying, this is a positive number, meaning it doesn't have a negative in front of it. If you're selling, then there'll be a negative in front of that first 0. So it would be negative 0 point whatever the number is. But because we're buying, it's not. But remember that for when you sell them. That makes a huge difference. And then, of course, you want to select once per bar so that you're going to be alerted every time price hits that area. You want that, right? And then, of course, you want to make sure that these areas are checked here. Notify you in the app, right? Meaning the if you got the app on your phone, the TradingView app, which I recommend that you should have on your phone, download that, and you'll be notified in the app. You'll be notified if you have your computer on. You'll be notified. It'll show a pop-up box if you got your computer on. It'll send you an email notification, so you'll get a notification on your phone as well. So you have several ways to be notified that your price criteria is met. So that's just like saying, hey, I got money waiting for you right here. This is the best time for you to go ahead on and get in, right? And then you're going to go ahead and hit more actions and make sure that the play sound is checked, and this will play the sound on the computer. However, it doesn't do that on the phone, but it'll give you the notification. Now, if you already have it set in your settings to be notified when you get notifications, then you'll get that notification sound that you already have in your computer, in your phone. And then you set the tone. The beep beep is the most annoying one, so that's why I chose it. The other ones I can pretty much sleep through. And then, but not the beep beep. That one is annoying. It wakes me up, and that's what I want. Then I have it for 30 seconds. Send to email and text. You want that one checked as well. Now, I did mention this before, but I'll mention it again. In order to have the alert option on TradingView, you have to upgrade to the Pro on TradingView. You have to upgrade to the Pro on TradingView. It's $29.99 per month. Um, so I recommend the investment. It's a very small investment for what you're going to be making, and you have to just be okay with paying for what you need to get what you want. Now, also, I would say this: the app. I'm sorry, yeah, the app that you can download, the Easy Indicators Dashboard app. There is a cost to that as well, but it's very minimum. It's $3.99 per month. Okay, and so you can utilize that. So that's it. And then, you might want to put a note, being that you have multiple alerts that you're going to be putting in. I would just say buy, you know, because you already know what you're looking for when the alert go off. So you don't have to do all of write a book. Just put buy. That's what you're looking for. And then you hit create. I'm not going to create it because I already have it done in here. And that's how you do the alerts. And you would do that for each one of the pairs that you have identified. And that's it. And you just wait. Now, here's the thing. It's not likely that all of the alerts are going to go off at the same time. But it is likely that while you are currently in a trade, because the alert went off and the setup was good, that another alert will go off while you are in an active trade. That's likely. You have to be okay with, okay, well, I can't get that one. And, your active trade may close shortly thereafter you got that alert, and there's still an opportunity for you to get in, then you can get in, right? So just understand that it's not meant for you to get in the trade for every alert that goes off. You have to always balance your risk. So you don't want to have multiple trades active on your account at the same time. You don't want to do that. Now, with the 20 pip strategy, is more likely that you can, be in two trades at the same time, because again, 20 pips you can get. You don't have to really be in the market a long time to get 20 pips, right? Use the trading plan, guys. It works. It really, really does. And then that way you'll always have trades in the bucket, so to speak. Always have trades in the bucket that you can trade each day or for the whole week. And it just works out. So just manage your risk. Don't try to be in all of, if you get 3 alerts that go off relatively in the same time frame within maybe 5-10 minutes of each other, I don't recommend that you take all 3 of those trades. You have to manage your risk, right? Manage your risk, because you're not typically going to be in the market a long time to get 20 pips. You get your 20, you close out one, then go back to the one that just the recent one that went off, and you can enter at that time. You can enter at that time. Always confirm it though. Always do your confirmation checklist though. And then if everything check out, go ahead and get in the trade. It's that simple. Okay. So that's what I do every weekend. That's what I do. And I like to on Mondays. On Wednesdays, I do another check. Just to see if there are other setups that have presented themselves as well. Also, the last thing I'm gonna mention is I don't recommend that you trade multiple pairs of the same primary country. Like, in other words, I don't recommend that you trade all USD pairs, right? Because if the USD is the primary pair, it's pretty much going to be moving the same way. So let's say that we got news, and the news alert impacted the USD pairs, okay? And you're in a buy in USD, and you got 2 USD pairs. Well, guess what? If that news event caused those pairs to spike in the other direction, both of them are going to spike in the other direction. So you're going to be in double negative, right? So it's always good to balance it out with the negative correlation pairs, is what it's called. Negative correlation pairs. Meaning, good example is Euro USD and USD JPY. Those are negative correlation pairs because they move opposite. So when Euro USD is buying, USD JPY is selling. Back testing, you can see for yourself. So that would be a great combination because you're balanced now. So even if there's a news event or a spike or what have you, and it affected the Euro USD, you still in a good position for the USD JPY. So you're not double negative. You're not double negative, right? So yeah, so that's what you want to do. So if you buying USD, Euro USD, you want to be selling USD JPY. That way you are profiting on both directions because they're negative correlation pairs. And maybe I'll do I either do a video or I'll just do a screenshot of the list of correlation pairs, whether positive or negative. All right, that's it. I don't went over 30 minutes. Okay, you all have a great week, and I'll be checking back in the group, and we're going to make this a great trading week. We're going to make a whole lot of money. I don't care if you're in demo. I want you to understand it's not, of course, we in it to make money, but you got to get the skill first. The skill is more important than the money because without the skill, without the know-how, you can't get to the money. So you should be super excited when you are in your demo and you profiting in your demo. You should be super excited because what that says is that you got the system down, you got the routine down, you winning, you got the skill down, you know how to do this particular thing. And that's when you start opening the door for the money. So let's make this a great week. And all the things that you're learning, whatever you're profiting, throw it in the group. Let us all celebrate together. Let us all learn together. So I'm looking forward to this week, guys, as you can probably already tell. And I'll be talking with you real soon. Bye-bye.